Good morning, everyone, and happy Wednesday. It is Julie here with TipRanks with your pre-market morning update, where we are covering everything you need to know before the market opens. I am here Monday through Friday with daily videos before the opening bell, so make sure that you're subscribed to the channel and turn those notifications on so that you can stay up to date with all of our latest videos. This morning, we are taking a look at exciting stock market news, this morning's biggest gainers and losers so far, plus some notable earnings reports. So here we go, starting off with stock market news. U.S. stock futures are fluctuating this morning as investors eagerly await to hear the Federal Reserve's assessment of the U.S. economy. The Dow futures were up about 0.04%, S&P 500 futures down 0.13%, and NASDAQ futures down 0.43% this morning. Jerome Powell from the Fed is expected to speak at a news conference Wednesday afternoon following the adjournment of their Federal Open Market Committee meeting. In other news, CDW, a multi-brand technology solutions provider, has agreed to snap up Amplified IT, a leading education-focused consultancy, for an undisclosed sum. CDW expects the deal to be minimally accretive to the adjusted earnings per share for the year of 2021. The financial terms and other details of the deal were not disclosed. Amplified IT, a Google Premium education partner, works with its team of Google Cloud professionals to provide insights, services, consulting, and solutions to help schools get the most out of the Google Cloud. The CDW stock does come in as a strong buy, with an average upside potential of about 7.8%. We haven't seen any analysts update their price targets for the last month, but maybe this news will spark some increases. Chip maker AMD, or Advanced Micro Devices, has launched a new CPU, but their market share gains could be limited to supply issues. On Monday, the chip giant launched the third generation EPYC server CPU, code-named Milan. Compared to their competitor Intel, across certain workloads, Milan has displayed more than double the performance capabilities of Intel server CPUs. Following the launch, one analyst noted that AMD continues to deliver meaningful improvements to its server CPU platform and appears poised to expand across customers and workloads. However, some of the upside could be limited due to industry-wide supply constraints. AMD does come in as a moderate buy, with an average upside potential of just shy of 27%. We saw several analysts reiterate their ratings yesterday. We had one sell rating with a downside of about 15%, and the other buy ratings coming in between 28 to 45% potential upside. Following an unsolicited acquisition proposal on Friday, Aegion has now received a higher buyout offer from New Mountain Capital. Per the revised offer, New Mountain has agreed to pay $27 per share in cash to the shareholders of Aegion, which is higher than an earlier buyout bid of $26 per share announced last month. The revised offer values the company at $995 million, including their net debt. Aegion's board has approved the revised New Mountain offer and expects to close the deal in the second quarter of 2021. Furthermore, Aegion will become a private company after the deal is completed. Analysts currently maintain a hold rating on the Aegion stock. And we also have NuVasive, who announced an extended partnership with the ISSGF, or International Spine Study Group Foundation. They extended their partnership with the launch of 2 new clinical trials. These studies will be targeted at improving patient outcomes in adult spinal deformity surgery. The president of the ISSGF says that our partnership with NuVasive represents a collaborative commitment to better understand the pathology and treatment of adult spine deformity. Analysts are a bit mixed on the NuVasive stock, however. It comes in as a moderate buy with 4 buy ratings and 5 holds. The average price target is actually a slight downside potential, although we do have a couple buy ratings in the last couple of weeks with about 2 to 5% potential upside. And we also have Euronet Worldwide, who saw a couple buy ratings reiterated today after announcing that they have agreed to buy the Piraeus Bank Merchant Acquiring, or PBMA, business of the largest bank in Greece, Piraeus Bank, for $360 million. This transaction also includes an agreement for a long-term strategic partnership between the two companies for collaborative product distribution, processing, and customer referrals. The acquired assets and services include about 205,000 POS terminals at 170,000 merchants across Greece. Euronet Worldwide comes in as a strong buy, and today we had 2 analysts reiterate their price targets with upside potential between 8 and 21%. Now, taking a look at this morning's biggest gainers and losers so far. Starting off with our biggest gainers this morning, which includes FSD Pharma. Trading under the ticker HUGE, they're currently up 48% in the pre-market so far. We also have Strata Skin Sciences under the ticker SSKN, who's currently up about 19%, as well as Immatics under IMTX, who are currently up just over 15%. Now taking a look at our biggest losers, we have Sunlink Health Systems under SSY, who are down at nearly 23% in the pre-market. However, this is following a gain of over 151% yesterday. We have CHF Solutions under CHFS, who are currently down just over 17%, and Plug Power under PLUG, who are currently down 17%, following a loss of 8% yesterday after disclosing accounting errors in the results for their 2018, 2019, and first 3 quarters of 2020. Now moving over to notable earnings reports. Starting off with CrowdStrike. The cybersecurity firm reported better than expected fourth quarter results, and their forecasted first quarter revenues came in ahead of analyst expectations. CrowdStrike delivered fourth quarter revenues of $264.9 million, which increased 74% year over year and topped consensus estimates of $250.6 million. Their subscription revenues increased 77% year over year, and professional services revenues grew 49% year over year. The company reported fourth quarter earnings of 13 cents per share, which fared better than analyst expectations of 8 cents per share. The CrowdStrike Holdings stock does come in as a strong buy, and we saw several analysts reiterate their price targets just today, with upside potentials ranging between 27 to 42%. We also heard from SmartSheet, who reported better than expected loss in the fiscal fourth quarter and outpaced analyst expectations for revenues. SmartSheet incurred an adjusted loss of 4 cents per share in the fourth quarter, compared to the loss of 13 cents in the recorded prior year. Analysts had expected the company to report a loss of 13 cents per share. Their total revenue of $109.9 million surged 40% year over year and topped analyst expectations of just $102 million. SmartSheet stock also comes in as a strong buy and also had several analysts upgrade their price targets today. We do have one hold rating with about a 10% potential upside and several buys ranging between 16 to 23% potential upside. And yet another company surpassing fourth quarter expectations was SharpSpring. The cloud-based marketing technology company saw improvements in net revenues retention and net agency client expansion. SharpSpring's revenue increased 25% year over year to $7.7 million from $6.1 million in the comparable year-ago period, and beat analyst estimates of $7.61 million. The company's net loss per share was 9 cents in the fourth quarter, coming in lower than analyst expectation of a net loss per share of 13 cents. SharpSpring stock comes in as a moderate buy and saw several analysts upgrading their targets with one hold rating and 2 buys ranging between 10 and 25% potential upside. And we also heard from Priority Technology, who also reported better than expected fourth quarter earnings and revenue. Priority Technology's revenue increased 8% year over year to $106.1 million and beat analyst estimates by about $0.48 million. The company's diluted loss per share was 1 cent in the fourth quarter compared to the diluted loss per share of 11 cents a year ago. There is just one analyst rating on Priority Technology Holdings, but he is very optimistic as he comes in with a buy rating and a price target that is about a 74% potential upside. In the after hours today, we're expecting earnings reports from Five Below, Williams Sonoma, and PagerDuty. So that is Wednesday morning's pre-market update, getting you up to speed with everything you need to know before the opening bell. Don't forget to also check out the TipRanks Twitter page to stay up to date with all of the latest news. As I said before, I am here Monday through Friday with videos out before the opening bell, so make sure you subscribe to the channel, and if you enjoyed today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Thank you guys so much for watching. I hope you have a fantastic day, and we will see you back here next time.